Greetings in the name of the Most High Yah. It's King Yediah, aka King Solomon, staying wise in life and in these markets. And today is the 22nd of August 2022. Right now it's 12:53 p.m. Eastern Time. And I'm going to do a little trade recap. Not trade recap, sorry, my bad. I'm doing a little technical analysis on the ES1 slash SPY. Well, ES1 is like the futures of the futures market of like the SPX, right? So I'm gonna do a little technical analysis and a little correlation with the US dollar as well to see what's actually happening and what may come in the future, right? So pulling out the epic pen right here, and let's get started on this daily chart of the ES1 mini futures, right? So I'm looking at this setup right here previously from the 24th of February, right? This is where support started. Let me make sure it's the right date. Right, so the 24th of February, right? So we had that first support candle, volume came in, and we had that support there from the initial selling, right? So we had first support here, then we retested VWAP, and then we fell again, right? So that was like the beginning of the bear market, right? So we started to have some support here again on, I think that was the, wait, hold on, let me see, the 8th of March, right? And then we had another support day on the 15th of March. So we had three support levels, right? Hold on, let me just, yeah. So three support levels, 24th of February, 8th of March, and the 15th of March, right? And that's when we really got the rally and we pushed up to above upper VWAP. This is the annual anchored VWAP. You see we started here from the 1st of January. And this is showing you VWAP throughout that time. From the beginning of the year, this is VWAP right here. This is the white line. This is upper VWAP. And this is lower VWAP right here. So it's giving you volume weighted at price action. Like these are the indicators that show if we're above value, which is VWAP. Anything above this is above value, right? Anything above upper VWAP is really bullish, right? Anything above this area here is very bullish volume wise, and anything coming around this green line is a support area, right? It's kind of like the last area of support volume wise for before you get really bearish, right? So anything coming above this level is coming back into value, right? VWAP is value, this is support, and it's coming back into value. Anytime you see we moving off this green line upwards, and then up here is moving away from value, right? This red line, upper VWAP, that's moving away from value and getting very, very bullish, right? So with that said, right, so we had this three support levels here, three bottoms, right? So then we finally broke above lower VWAP and headed towards VWAP, broke VWAP, and eventually got up to above VWAP, right? So this is where we're supposed to go bullish, right? Because we're moving away from value. But this is what happened. We had the reverse, came back into value, lost value, came back to the support level, lost that. So that's when everyone is like, damn, this market is really bearish, right? That's when I guess the bulls kind of was convinced that, you know, things are kind of looking bad, right? So with that being said, got some support, got some buyers coming in, trying to, well, the market makers, let me not even say buyers, because you and I, even the hedge funds, they don't really control the market, as the market makers control the market, right? And the hedge funds is trying to kind of entice the market makers to go a certain way by putting money in front of them for them to like to interact at that level, right? So if the hedge funds start coming in here, the market makers might have incentive to, okay, let's do some transactions here and push it up so they can make some money, right? And let's see. So when we came back here, got some support, pushed back up into a support area here, but got resistance, right? So the market is really bearish. The market makers are showing the hedge funds, the big guys, that listen, this is really where we want to go. We're going lower, right? So you'll take your profit up here. We gave you all a little chance, right? Take your profit, and we heading back lower, right? So coming around now to, let's see, what date is that? Around the 21st of June, right? We had that first support level again, right? And if you notice, it's looking similar to this. This is what I want to point out, right? So when we had that rally, look at the similarity that's going to play out here with this rally. So we had that similar three levels of support, right? And actually it's the same kind of support. So we had first lower support here, then we had that that pullback, and then we even had a lower level. So it's supposed to be higher lows, right? But notice this last one here came below this prior level, so it's not a higher low, right? And if you notice, same thing happened here in the middle. We got that support, and price pulled back to a lower high, a lower low, right? So from there, then we pushed up, broke above upper view up, lower view up, which is this green line. Notice what we did here, broke above lower view up, right? Broke above view up here again, did the same thing over here, retested view up, and there's a little difference here. We retest view up, but we lost it, right? Today we're losing view up, but I'm just looking at it as we're probably coming back to this support level right here, if we do come back to that, because we might just stop on the top of this congestion right here. We might stop right here, right? Because I'm thinking price is gonna probably get back to upper view up, or even test view up, upper view up here again. Like, to me, this is the setup for like a bullish rally in a bear market. We're having these how could I say it? These encouraging trades. This like, especially with the hedge funds, the market makers are trading really against the hedge funds, and they're just working with them, right? It's either they're working with them or they're taking their money, right? So in my opinion, these bullish rallies right here is giving the hedge funds some trading psychology. It's trying to give them some support, mental support, right? Because they need to make money as well. They can't just be losing money, because all of this here, hedge funds really are bullish, right? They buy low and they look to sell high, right? So they even sell on like breakout, buy on like breakouts here. So some of them lost money when we lost this again, right? So they lost some money here when we hit here and we pulled back. They had to stop out. That's why you get that little flush, right? So when the market maker keeps doing that to them and they're losing money, they're losing faith in the stock market, right? So they have to give them these rallies. They have to give them these rallies, especially with the kind of like the initiation of a recession coming, and it's looking like doom and gloom. It's like, if you're a farmer and winter is coming, right, you're gonna have to harvest at some point to prepare for the winter, right? So look at this as like a harvest, right? It's giving them some chance to make some money before we really start to go back down and things start to really get bad for them a little bit, So they're gonna have to start shorting the market as well. So that's where the market makers will come in and start buying the dip, right? As they short, they're gonna buy it and stop the market from selling off. So it's a psychological game, you know what I'm saying? anything that maybe the market maker is doing, they'll probably try and get the opposite side to do something opposite than them. You know what I'm saying? So if they're really bringing down the market in general, right, they're gonna have to do stuff like this to be a opposing force, like mentally. You know what I'm saying? So they can get money to come back in, so they could short it again, right? So I'm thinking they're gonna probably play out this same pattern here again, and let's see how the US dollar kind of lines up with this, right? Let's see here. So the daily chart on the US dollar as well. This is something I noticed here. This big volume right here. Let's see what candle that coincides with. Alright, so it's coinciding with this candle right here, right? Now this candle here, look at the volume on this, right? And look at the volume on this one. Same size candle, even this candle here, same size candle as previous candle, volume falling all the way off, right? Same size candle, volume falling off, right? And we're running into this zone right here, this resistance zone of the previous sell-off, right? So we hit this zone here and we fell, right, back to this support level, and even the volume point of control, right, which is this white dotted line. So we had some selling right there as well, came back down to another heavy volume node, which is this red line right here, right? Got some support and now we're rallying up. But this candle right here, this volume right here, compared to this candle is very anomalous, right? So I'm thinking it's just a pump. We're gonna come back here, right, around this area, and we're gonna sell off again. We're gonna at least pull back to the volume point of control, right, this area right here, and if not, back to this support level right here, because even though everything is looking good for the US dollar with higher interest rates and, you know, foreign economies are gonna start buying the dollar, I think the Fed is still somewhere, somehow behind the scenes capping it. They're capping it from just going out of control, like super bullish, you know what I'm saying? Because I don't think it's really good for like the world on a whole, right? For the US dollar to be super strong and everything is priced in the US dollar, it's gonna put a lot of pressure on the world's economy, right? Because everything would get commodities and everything will be super expensive. So the growth of like tech and stuff like that will be severely hampered if the US dollar is like super strong when they have to buy copper and stuff like that. So it's not a good thing. So some way, somehow, even though they're raising interest rates and that'll cause buyers to come into the US dollar, they need to somehow cap the bullishness of the US dollar. You know what I'm saying? So I think we're not going to have this runaway bullish action. We're going to have like maybe this sideways movement. You know what I'm saying? Still bullish because like everybody will be jumping into it, but we're going to get that kind of sideways movement, that rangy kind of movement. You know what I'm saying? So with that being said, if we do get that resistance up here, that's definitely going to support. Let's see, let's go back to the ES1. That's going to support the US dollar. I mean, the ES1 and the stock market getting a rally upwards. Because once the US dollar starts pulling back, that's when the stock market is going to rally up. But then again, the US dollar is overall bullish, right? So when we get those little rallies, like in the stock market, just know that the US dollar is going to pop back up, right? So if the Fed is trying to keep it down, they're always going to get that pop back up, right? So even if we pull back here on the US dollar to, let's say the volume point of control, which gives the stock market a breather, right? when we pull back here, right, and the ES1, let's go back over here, and the ES1 rallies, right, we rally up to this level. Gotta keep in mind that the US dollar is gonna pop up from here, which is gonna really bring the ES1 down again, you know. So that's my little thesis on how this is probably gonna play out in this approaching recession, and like how the stock market gets these bullish rallies and stuff within a bear market. So that's just my little humble opinion. I ain't no super guru or nothing like that. It's just, this is how I'm looking, trying to make sense of how this bear market is working, and with the fundamentals of the economy and the world economy, and what's kind of approaching, how this is going to play out, right? Because for the bulls, you gotta think about it like this. If there's no supporting fundamentals for you to be bullish, what are you being bullish on? Is it just hope, or is there some kind of fundamentals you're trying to incorporate into it? Because if it's fundamentals that you're going off of, especially like big hedge funds, where is the bullish fundamentals? High interest rates isn't good. Inflation isn't good. The world economy isn't good. We still have this kind of pandemic lingering and all this kind of stuff like that. So what's the positive here, you know? But it's just some food for thought. That's just my little thesis, you know what I'm saying? Alright, y'all, it's King Yedia, aka King Solomon, staying wise in life and in these markets, and y'all trade safe and stay blessed.